Hello, good afternoon everyone. So first of all, can you tell me whether the screen is clearly visible to you guys and my voice is audible or not? Hi Satya, how are you? I'm good too. Can you tell me whether the screen is visible clearly to you? Yes, tell me. Yes, from the perspective of ESI, these videos are enough because we are already comprehensively covering each and every circular. Okay, but apart from that, PIPs are also necessary. So you must focus on that also. Okay. So let's wait for 1 or 2 minutes. Let's see if others also come. If not, then we'll start. So today, as you know, what we have done yesterday, we'll again start with circular portion first. Okay, because circular portion is very critical from the understanding point of view, and rest all news, most of it is dynamic in nature, and also most of it are either one-liner or factual in nature, so that we can do very swiftly afterwards. But circular ones are important because it not only teaches what's actually happening in the news, but it also teaches us most of the static concepts. So that we will particularly focus upon. Okay. September will be done in the same manner only. Okay, so no month will be left, don't worry, because I guess this is the last part of August. Okay, so we've completed August. Most probably we'll do September afterwards. Okay, and once September will be done, I'll complete July in 1 or 2 sessions, and we'll do mostly MCQs that are relevant from the perspective of NABARD examination. Okay, because that's the most recent examination, and we'll see. Anyways, the August and September month is very much important for that exam, but July also we will cover the content, but mostly we'll focus on doing MCQs for July. Okay. So let's start with our today's session. Okay, so in today's session we are doing economics and financial news, August part 3. Okay, that means we are covering from 21st to 31st of August. Whatever news that are relevant from the perspective of RBI as well as NABARD, we are covering here. Okay, this includes not only the static or dynamic one-liner news, but also circular news. So first let's focus on what's mentioned in the circular, and we'll give much more time to that because we'll try to understand whatever the static concepts that are present in there. Okay, why I'm focusing upon that? Because ESI paper in NABARD, which is phase 1 as well as phase 2, not only ask current but also static portion. So if you have understanding of the static portion, then at least some marks are there for you. Okay, so this is the first news, which is about SEBI plans. So whatever I'm putting it in the box, so focus on those keywords because every keyword is important from the perspective of exam. So SEBI plans follow on offer rules for REITs. Okay, so the natural question comes, what is follow on offer and what are REITs, and add one more thing into it. What do we mean by invites? What are these and why is SEBI concerned about both of them? Okay, so let's understand each and everything from the static point of view. Then we'll be able to much more appreciate whatever is in the news. Okay. So as most of you who have attended the previous class, okay, we've talked about IPO, okay, which says initial public offering. Okay. A company who wants to list its shares on the stock market for the first time goes for IPO. Okay. Through IPO, let's suppose take the previous example of M Private Limited. This company wants to list its shares on the National Stock Exchange. Okay. Through IPO route, I have listed around 100 shares in National Stock Exchange. Okay. But what if, I feel that, I want much more money, or I feel that I want to reduce my debt and increase equity more. So although I've already been listed, what's much more option for me? How I can raise much more money? Then comes the role of follow on offer. Also known as FPO, follow on public offering. So this is meant for those entities that are already listed on the National Stock Exchange or Bombay Stock Exchange or any stock exchange that are present in India. Okay, so as you all know, if we take the most recent example, if you have seen the news, you must have heard about Adani Enterprises stock actually plummeting down because of Hindenburg report. Okay, and you must have also heard about that just before Hindenburg report, Adani talked about going for a FPO, that is follow on public offering. Adani Enterprises want to further want to raise capital from the market through FPO route, but Hindenburg report actually plummeted the stock and put this FPO in jeopardy. But I'm giving you this example just to make you understand that what's the purpose of FPO. Through FPO, companies raise capital who are already listed after IPO. Okay, so I hope you understand the concept of FPO. Now let's talk about what's the concept of REITs as well as invites. Okay, so first of all, the primary thing is their full form: real estate investment trusts, infrastructure investment trusts. So both of them are investment trusts. If you go and see the definition online, you will see that these are pooling arrangement. Okay, so these are the pooling arrangement. What do we mean by pooling arrangement? So I'll tell you one proposal if you want, if you guys are interested. If I give you proposal of having a stake in a particular commercial real estate property, and if I tell you you don't need to get involved into the business, but there's a mechanism through which you can actually get income from that, and what you just have to do is buy some of the stake from it. So this is what REITs is. Okay, it is a pooling arrangement just like what mutual funds are. Okay, where various investors, okay, so suppose me myself, okay, Satya, some other people, okay, all of them are contributing money to this REIT. Okay. This REIT is being managed by a professional. Okay, and whatever funds that are collected over here, all this fund, that will be invested in real estate projects. Okay, which includes commercial properties that provide rent, and these rent will be provided to the investors back. Okay, this rent will be provided to the investor bank as a dividend. Okay, so this is the whole mechanism of REITs, or investment trust, you can say. REIT focuses upon investment, particularly in real estate projects. And if you go by the invites, okay, here we are saying that it is related to infrastructure investment trusts. So as the name suggests, what do you think, where it will invest most of the funds that are collected under invites? Anyone? So it will actually invest most of its fund into infrastructure projects that are income generating, which includes roads, railway projects, okay, port and others. So these are the core functioning of REITs as well as invites. Okay, and understanding this from the perspective of as a another mechanism for providing or utilizing or turning savings into productive use in the economy. Okay, so since these entities are just like mutual funds, they are regulated by SEBI. Okay, REITs, investment infrastructure trust, okay, regulated by SEBI. And now that we have understood each and every aspect of REITs, invites as well as follow-on public offer, let's see what the news is all about. So the news is SEBI plans follow-on offer rules for REITs. That means SEBI is trying to make rules so that these REITs as well as invites that are already listed on the stock exchange can raise further capital after the initial public offering. So I hope this is clear. Next is insurance regulatory body lowers the minimum capital need for foreign reinsurers to 50 crore rupees. Okay, so here are the news is plain and simple. If you want to just cram it, then you can do so, but we are here to understand the concepts, understand what is reinsurance, understand what are foreign reinsurance companies, okay, understand what's the capital requirement, and also understand why it is that IRDA is focusing upon reducing minimum capital requirements so that these foreign reinsurance companies come to India and do more of the reinsurance business. Okay, in this manner we'll comprehensively analyze what this circular is all about and what is the context and what is the implication of this circular is all about. So first of all, let's understand reinsurance. Okay, so before that, insurance, as we all know, is a contract that indemnifies the insured against contingencies. So this is a very technical definition. Let's make it simple. it says indemnifies the insured against contingencies. That means if you have, bought a insurance policy, then if the policy event occurs, then the insurance company will repay you or will pay you the compensation as per the policy provisions. So let's take an example of motor insurance. Okay, your car got hit by some accident and it incurred some damages. So that insurance policy states that we will indemnify whatever the damages are. Indemnifies also means that we will restore your car in the previous position. That means to make your car healthy again, whatever expenses will be there will be paid by reinsurance company. Okay. So inherently what this insurance is doing, insurance is actually transferring the risk of accident from you to the company, insurance company. Okay, because now if the accident occurs, I'm not paying that, this insurance company is paying that. Okay, so this is the transfer of risk. But now let's suppose it's a Max Life insurance company, okay, and the situation is of COVID-19, where many people are dying, people are perishing. Okay, so at this time when various people are perishing, everyone will go to Max Life insurance for the amount of compensation. But insurance works on the basis of pooling and diversification of risk. That means insurance companies' business model is as simple as that they take risk from various people, but only some of them will be needing those compensation. Then money from others will be compensated to the person in need. This is the insurance business model, simple. But what if everybody is asking you, okay, everybody is asking you the amount of compensation? As all of us know, the policy premium is very low compared to the coverage the insurance company pays to you. Okay, so in that situation, insurance company has the risk of going bankrupt. Okay, so how do we save such type of insurance companies? We go and transfer the risk to the reinsurance company. Okay, so the risk is getting transferred from the customer to the insurance company and to the reinsurance company. So the reinsurance company, okay, is saying to the insurance company, don't worry, if such situation occurs where all of the people are coming to you at once, we will insure such contingency of yours. So this is the core function of reinsurance. Okay, it is actually adding a layer of protection in the insurance spectrum. Okay, and if it goes further than that this reinsurer also wants to get insured furthermore, then this process is known as retrocession. Okay, so this is the core aspect of reinsurance. So the key thing which from this we understood is that reinsurance provides additional layer of financial security of this insurance whole ecosystem. Okay, so the importance is very much substantiate. Okay, and since we have limited number of reinsurance companies in India, and as all of you know, insurance penetration is very much low in India, we want other multinational companies to come into India and expand the reinsurance business so that insurance business actually flourish in the country. Okay, so this is what's the whole news is all about. So to previously what used to happen, previously minimum capital requirement for a foreign reinsurer was rupees 100 crores. That means a reinsurance company must have 100 crore of funds with itself in order to do business of reinsurance in India. Okay, but this is usually very much higher capital amount of requirements that IRDA actually put in previously, and this actually disincentivized various foreign companies to come to India. But when it is being reduced to almost half, 50 crore rupees, then it will enable various multinational reinsurance companies such as Swiss Re and other companies from Europe to come into India and do reinsurance business. So this is the whole news which you will read here, and you will get the same gist that I have explained to you. Okay, let's move on to the next, which is new FPI disclosure norms kick in from November 1st. What is FPI? Foreign Portfolio Investors. Okay. So SEBI is saying, or SEBI is actually trying to put in new FPI disclosure norms. What do we mean by disclosure norms? Disclosure norms is such that if you actually go beyond the conditionalities that SEBI actually have put in, then you have to give the details with respect to where your funds are coming, who is actually benefiting from your investments. Okay, and this SEBI is actually trying to do because of the Adani fiasco happened in the country. Okay, because of Adani Enterprises stock plummeting on account of Hindenburg report and various allegations put in by Hindenburg report said that most of the Adani group funds have been siphoned off from the promoter itself. That means from the Adani's family, the fund is getting siphoned as a foreign portfolio investment. So this was the allegation, and to increase the transparency with respect to FPI investment, this new disclosure norms the SEBI has released. So what are these new disclosure norms? So first, please remember this is very important, that any overseas fund that hold more than 50% of their equity investment in a single Indian corporate group. So suppose I am if from the Swiss Re company, okay, just take example of Swiss Re. Okay, so Swiss Re reinsurance company has invested, suppose they have 100 crores and more than 50 crores they have invested in Adani Enterprises or Adani Group. Then they have to tell what's, who is owner of Swiss reinsurance company, where the benefits of this investments is going. Okay. Next condition is that they have more than 25,000 crores of equity assets under management in the Indian market. Okay, so it says that if Swiss reinsurance company as an institutional investor is already putting more than 25,000 crores in the Indian equity market, then they also have to disclose who is actually benefiting the investments from the investments. Okay, and these two conditionalities, if you look very closely, more than 25,000 crores if they are invested in the Indian stock market, then they can easily do volatility in the Indian market. So I am asking, what, please explain FPI. So FPI, as I've already told you, this is foreign portfolio investors. What do we mean by foreign portfolio investors? Suppose if a person from America wants to invest in Indian stock market. Suppose he wants to invest in Adani Enterprises. Okay. But only up to 10% of its shares. This person will be known as foreign portfolio investor. Okay. There's a very crucial difference between FPI as well as FDI. You might say that if a foreigner is investing in India, okay, so then what's the difference in foreign portfolio investment or foreign direct investment? Then the crucial difference between both of these concepts is the limit in which both of them are actually investing in a particular company. What's the investment? Let's see the limit also. So suppose if I am as an investor situated in USA, I want to invest in Adani Enterprises. Adani Enterprises have deployed 100 shares in the stock market. Then FPIs have the limit of not buying more than 10 shares in a particular company. This is the limit provided to FPI. Okay, so I am as a portfolio investor, I can only buy maximum 10 shares of this Adani Enterprises because this is exactly 10% of the total shares of one particular company. Okay, but if we want to go beyond this, then FDI comes into play. Okay, so any investment beyond 10% in a particular company, this will be treated as FDI. Okay, and FDI is usually long term. This is a very short term money. You must have heard about hot money. You know, FPI has bought various amount of shares, FPI has sold various amount of shares, because of which the stock market actually going into volatility. So such is the nature of FPI. Very short money. Institutional investors, you know, put in the money, you know, book their profits and go back. This is such kind of money. But when you think about FDI, you know, you see that Suzuki is coming into India and building a plant of manufacturing. This is known as FDI. Tesla is coming to India, building a plant in India. Okay, this is FDI because they are thinking in terms of long-term investments. Now is it clear to you, Sai? Is FPI clear? Okay. So that's the whole news. Okay. Because of the Adani issue, SEBI is actually trying to put in these conditions. Okay. And based on these conditions, every foreign portfolio investor have to disclose in order to continue their trading in India. Okay. If they will not disclose, then they will not be allowed to do trading or investing in India. Okay, and this will help SEBI understand that whatever foreign portfolio investor that is doing beyond such type of investments, understand where the money is coming from. Okay, and if it is coming from the Adani Enterprises siphoning off their funds from, or you can say channelizing their funds from foreign jurisdiction, that will also become clear. Okay, and these conditions will come effect from November 1st. So we will see in November what's going to happen. Next is IFSCA looks to clear decks for startups listing at Gift City, which means IFSCA is thinking about, you know, making various type of rules so that various type of different type of startups can get registered in Gift City. Okay, specifically here IFSC talks about two kind of companies. One is holding company, another is special purpose acquisition companies. Okay, these two are very, you know, holding company although is very old, but this SPAC, special purpose acquisition company, is a very new concept and still not very much, you know, liberal, or you cannot easily register such type of companies in India. Okay, and you will not find such type of companies in India. So first, before understanding the news, we'll understand what's the difference between holding company as well as SPAC. Okay, and once we understand that, we will be able to understand why this whole news is all about. So holding company, I'll just give you an example, you will be able to easily understand this. So amongst all these four companies, what do you think is a holding company? Sai. Also take example of Reliance Group. Good morning, Karthik. Good evening, Karthik. Sorry. So, since we are discussing about holding company, from above companies, can any one of you tell me what do you think is a holding company? No? Yes, Karthik is right. Adani Enterprises. Okay. This is the holding company or the parent company that is managing all the subsidiary companies. Okay. Similarly, Reliance Group. Okay. This is a parent company or holding company that do not have their business as its own. Okay. Reliance Group as a company do not do any business other than managing various subsidiary companies with it, which are under Reliance Group. Similarly, Adani Enterprises do not have another business on its own, but it has the sole responsibility of managing various subsidiary companies that are within the Adani Enterprise. Okay, so this is the concept of holding company. Okay, so is this clear? Any confusion in holding company? Then afterwards, we'll understand special purpose acquisition company. That is much more important. Any issue? Okay. Special purpose acquisition company. So first let's just see what I'm trying to say and what is its goal. So this company is like a shell company. What do we mean by shell company? That this company exists on a paper, and when we say exists on a paper, that means this is a registered company but without any location, without any business operations, okay, without anything apart from that this company is only registered. Okay, so SPAC initially starts as a shell company, okay, then it goes to IPO. This is what do you say, listing of company on the stock market, or they can raise capital from VCs. And you all must be thinking that this company, which is only existing on a paper without any business operations, then what is it raising capital for? What does this company need capital for? This company need capital for, as the name suggests, acquiring a particular company. So this is the whole mechanism of special purpose acquisition companies. They are established as a shell company, or they are just as a registered on paper company. They raise capital from the stock market, and through that money they acquire a particular company. Okay, and that company later on becomes the whole business operations of this special purpose acquisition company. Okay. So at least broadly you've understood that what's the role of SPAC. Okay, and I will tell you why we do not see such type of companies in India. Okay, what's the major issue that these type of companies face in India, because of which you are not seeing such type of companies, and because of which IFSCA, that is a gift city. As you all know, what amount of liberalization is being provided to various companies, especially in gift city. Okay, so such type of companies are also getting allowed under IFSCA. So what were the major lacunas that these companies were facing? You know, for listing on the stock market, you need to have business revenue, you need to have profits. Okay, so such type of fundamentals you needed to show first to the Security Exchange Board of India, then only you will be getting permission for listing. Okay, so if they will not be able to raise capital, then what's the use of being a SPSE? Okay, so their core function got deleted because of SEBI's restriction. That's why you're not seeing such type of companies. Also, while doing companies registration, under memorandum of companies, you have to write about what this company is all about, what this company will do, what are the main what are the various core areas this company is actually trying to focus upon. But if your company is only just there for acquiring another company, you will not be able to justify your memorandum under Company Registration Act. So this also gets cancelled. So if you focus on India's domestic territorial area, you will not be able to register such type of companies, function such type of companies. Okay, so that's why only IFSCA provides such type of freeway in gift city. So that's what the whole news is all about, that they are trying to make framework and measures so that such type of holding companies as well as special purpose acquisition companies can establish in India's IFSCA. Is this clear? Any confusion at least in the understanding portion of this SPSE and holding company? And since these frameworks are getting made, so once these framework will be made and released by IFSCA, then we will understand much more that. To both of you, Karthik and Sai, any confusion in this SPSE and holding company? So let's move on to next circular, which is RBI Governor cautions urban cooperative banks against camouflaging financial position. It is as simple as that. Just nothing concrete is in there. Just how you must have understood or seen that RBI Governor through policy also regulates the whole banking system. Because this gift city region, okay, has been provided with various liberalization policies, okay, and they don't have such restrictions that are present in India's domestic territory. You must have heard about such type of regions such as SEZ, where various concessions are provided for any company to set up. So similarly is the gift city. Here various concessions are provided to various enterprises setting up their offices here. That means, if you take an example such that they can do forex transactions that are limited in India's other territory, that is mostly convertible as well as free movement in gift city. Also, you must have heard about that data transfer or data localization provisions are present in other territory. Such type of restrictions are not there in the gift city. So treat gift city as a foreign land, okay, in terms of economic sense, not in political sense. Treat this at least in economic sense as a foreign land. Okay, if that is a foreign land, then obviously most of the Indian restrictions won't be there. So as I was telling you that this news is nothing but just RBI explaining urban cooperative banks to, do not do any misrepresentation in your balance sheets. So that's what this whole news is all about. Nothing relevant from the perspective of exam. What is relevant is that you understand or you remember what are the, first of all, who remembers that how many tier structure regulation is being provided for UCBs? Any of you remember? In how many tiers UCBs are divided? Take a guess at least. Science says 2. So all of you please remember, and these are very much important static portion or static knowledge that you can see we have provided here also. Okay, so there are four tier structure in which UCBs are classified and they will be accordingly regulated. So tier 1 will be up to 100 crores. Tier 1. Okay. Tier 2 100 to 1000 crores. Tier 3 1000 to 10,000 crores. And this is their capital reserves. Okay. And tier 4 beyond 10,000 crores. As you can see here. So deposits and their structure. So 4 is there. Please remember these limits. Okay, very important. This can again and again be asked in the examination, at least in one liner or one word, 1 marks question. Okay. So now that we have completed these circular news, let's swiftly focus upon other news. So this is a plain simple news that FPIs invest 8,400 crores in equities on global cues China concerns. Okay, simple plain news, and also very dynamic news. Not, these numbers are not that much relevant for the exam, but what is important that you understand the concept of FPI as well as you understand the context in which why this thing is happening. Okay, so FPI as a concept we've understood when we discussed FPI disclosure norms, but this context that why FPI is actually reducing their investments in emerging market economies, because they are concerned about global uncertainty, because global recovery is actually hindered because of inflation as well as monetary policy tightening. Okay, and even China's economy is actually declining, and when Chinese economy is declining, then obviously the world's biggest market is declining. Okay, so when world's biggest market declines, the world global economy obviously gets impacted. Okay, so this is the whole news. Next is, after United Nations body, 3 nations ask India to resume rice exports. So why these nations are asking India to resume rice exports? India must have been stopped rice exports. Okay, why India stopped rice exports? Because the supply of rice actually got limited in India, and because of which prices increased, and whenever prices of grains such as wheat, rice as well as coarse grains gets more volatile, this hampers India's National Food Security Act or public distribution system, because all of us know under NFSA all the below poverty line as well as Antyodaya Yojana beneficiary holders get food at very subsidized rates, and these food mostly include wheat, rice as well as coarse grains. Okay, and if the price of rice becomes too much high, then it directly hampers our production food public distribution system, because government will have to procure at higher prices. That will reduce their that will increase their fiscal deficit because they have to do more expenditure. Now that is lifted, because this news we are reading about of August, so that might be the case. Okay, but whether export ban is there or not, they will not ask you export ban, because these things are prerogative of government and they do it whenever the case demands. Okay, what we need to understand why they are doing what they are doing. Okay, we need to understand the concepts or the causal relationship between government actions. And apart from that, the main thing that we need to remember is top 3 exports from India. Who will tell me? Top 3 exports from India. Agriculture exports. Okay, we are focusing upon agriculture exports from India, and this is very much important for NABARD examination, that you know what top 3 exports from India in value terms is. All of you, please tell. Sai is telling us about destination. I'm not asking about destination. What do we export as a product? Non-rice. What is this non-rice? Yes, Sai is right. Okay, non-basmati rice is the highest exported item from India in terms of value. Okay, after this, what is there? Tell me 2 more. Third is basmati rice. Very good. Very good, Sai. Your preparation is going fine. Good. And this is, this I'll tell you. Sugar. Okay. Please remember at least these 3 top export items. Okay. And since all of you know that rice is a very in demand item in export market, especially in Southeast Asian countries as well as in East Asian countries. Okay, so naturally these countries will be demanding India to remove export ban and give back the rice. Also, United Nations World Food Program is asking the rice to deploy such type of food in war-torn countries, or countries where humanitarian operations are going on, and these countries are mostly in Africa as well as Middle East. For example, Yemen, Somalia as well as others. Okay, now let's move on to the next, which is procurement by central public sector enterprises via government e-marketplace model grew by 74% in April to July. Just the same, simple plain news. It is, as we all know, government e-marketplace is a digitalized marketplace where all the government departments, not only the ministerial departments but also all the public sector units, can procure various amount of products from that place. If you want to find analogy in when we compare such type of thing in private space, then you all know that from Amazon we can buy most of our products. Simply GEM is such type of portal where all these entities, PSUs, ministry, can buy products listed on this marketplace and procure for their particular department. Okay, so an example can be stationery items from government e-marketplace is bought by IOCL, finance department. And the news is telling you about that procurement during these months actually grew by 74% when we see it from the previous year. Okay, so let's move on to the next thing, which is fresh formal job creation touched 9-month high in June. Okay, and this is the latest EPFO data. So EPFO data, as you all know, based on the registration of new employees. Okay, this data actually tells us about how the job market is actually doing in the economy. And based on this news, fresh formal registration on the basis of EPFO using this universal account number, it tells us that it is right now at the 9 months high. And this is the news in case of June. Okay. And what's the number? This is the number, 1 million in June, okay, or 10 lakhs in June. As you can see, it saw an increase from May 927, 703. Okay. And as you can see, from September till June, that's what it is talking about in context of fresh registration. You can see this is the month where the most fresh registration under EPFO is visible. Next news is about India ASEAN to conclude FTA review by 2025. So ASEAN, Association of Southeast Asian Nations. Okay. These mostly consist of countries like Indonesia, Malaysia, okay. So ASEAN, that's what I'm telling you, no? In ASEAN, first of all, it is a grouping of 10 Southeast Asian countries. Okay. So if we, let's draw world map. This is India. In this way we go. Okay. Here is China. This is Indonesia. Okay. This is Australia. And various countries such as Myanmar, Cambodia, Vietnam, okay, Thailand, Malaysia, Brunei, Indonesia, okay, all such countries, these 10 countries forms the grouping of ASEAN. Okay, so all these emerging economies have a grouping of as a name ASEAN. Okay, and with ASEAN, India actually had free trade agreement signed in 2009. Okay, so ASEAN as a region is very much important for India's economic development as well as India's security as well as strategic objectives. If you must have heard about concept of Indo-Pacific. So India's definition of Indo-Pacific talks or keeps ASEAN in the center. Okay, so important thing is that what the previous FTA that India signed with ASEAN in 2009 was not that much beneficial if we look at from the perspective of India. We gave too much concessions to ASEAN countries, okay, because of which a lot of products from ASEAN actually moved into India. Also, there was one major issue that all of you must have heard about when you were reading about RCEP, Regional Comprehensive Economic Partnership, where the concept of rules of origin was very much talked about. Okay, rules of origin talked about that through the rules on origin principle, we can easily identify that from which original source this product is getting rooted. Okay, so now we actually don't know whether China has actually made product, send it to ASEAN so that this can get exported into India. Okay, so to avoid such type of routing of products, we are actually trying to review FTA with ASEAN, and this government of India is saying we'll be able to do by 2025. Okay. Next is India launches first car cash test program. Okay, so this is new NCAP, new car assessment program. Okay, this is launched by our Minister of Transport, and this, assume it like a standardized agency that will tell you whether this car is safe or not based on standards and principles that they have adopted. Okay, and this NCAP program has a history in the world. Okay, such type of program you must be seeing in various countries such as USA, Germany. They have their own individual NCAP program that assesses the safety of car on the basis of various parameters that these countries apply, and this is India's NCAP that applies various standard policies so that it can assess India's car safety here only. Next is Nascom portal to bridge job scout seeker gap. What does this mean? Obviously, it means that Nascom has established a portal where various multinational companies are there, various people are there. Okay, so it acts as a bridge so that these people can get jobs into those multinational companies listed on this Nascom application. So Nascom application, what does it have different than the various other Naukri based applications such as Naukri.com, Apna and other applications? So Nascom is saying that apart from the academic qualifications based upon which these companies actually hire people, we are actually shifting towards skill based. If people are having skills, then academic qualifications can take a back seat, because at the end what company needs is skill. Okay, so this is what this Nascom's Talent Connect portal is focusing upon. It says focusing upon skill based talent rather than current practice of academic focused talent base. Okay, next is 15th BRICS Summit, India to become world's growth engine. So apart from this, what is important we will tell, but first of all let's see, this is what the Prime Minister is saying, that we will become the growth engine of the world in coming years. Okay, what is important if we see, let's see something static of BRICS. BRICS, as the name suggests, it includes Brazil, Russia, India, China and South Africa. It's a grouping of emerging market economies. Okay, in BRICS we also study about New Development Bank. It is similar to World Bank. Okay, it also provide funds to member countries, okay, for their infrastructure development. Okay. No, you don't need to remember that 10,000 number. No. Only remember that Nascom actually developed this portal and what is the name of this portal and how this portal is actually different from various other portals. Okay, Sai? So, this is a new particular news which says that fintech loan disbursement up 21% in financial year 23. Okay, so what does this mean? So we are talking about the fintech economy. Fintech economy, that means various lending applications. Okay, so this report is saying that such type of activities where an app actually lends you at least 1 lakh or 2 lakh rupees. Okay, that activity has seen 20% rise year on year basis. Okay, so people are getting access to finance through these digital lending also, and that's why you must have heard about that recently RBI actually released various provisions with respect to digital lending. Okay, so this is that simple news. So right now here, this detail is important. Okay, because this is directly related to the banking system, and this is a report which has a concrete these numbers. Okay, so remember these numbers, which is loan worth of 92,000 crores have been deployed, showing a 21% rise. Okay, this is outward remittance data. Remittances. The concept of remittances, we mostly hear when we think about various diaspora that we have, Indian, non-resident Indians go to the various foreign countries, they send back money to India. This is known as remittances or inward remittances that are coming into India. Okay, if you do it opposite, then this is outward remittances. Outward means that Indians are sending money in dollars or in some other foreign currencies to their relatives into other nations. Okay, so what do we mean by this? What this news is all about? It says that such type of remittances has increased by 50% to $9.1 billion in Q1. So this is the news. And why do you think this is happening? Any guesses? Karthik is asking what type of question they ask. So this Sai is right when we talk about liberalized remittance scheme, but this is a scheme through which you can actually send money. But I'm asking for what purpose they are actually sending the money. Any guesses? Written here, na? Yes, first education, obviously it is correct, because as all of us know, most of the Indians go abroad for education. Recently, all of you must have seen the phenomena of various Indians investing in US stocks. Various Indians investing in various stocks on foreign exchange. So you can also say investments. And other travel, as rightly pointed out by Karthik. Okay, so all of these things, if you see or if you remember the scenario in the previous year, then you must have easily remember that education, obviously various Indians are going abroad, be it Canada or USA. Investments is also increasing, and after COVID, this travel is also increasing. So these are the various major reasons because of which outward remittances rose 50%. Okay. So as you can see here, this is the growth. Yes, Karthik rightly said. Mostly people are going to Dubai, investing there. Okay. So this is all from August. From tomorrow onwards, we'll start with September. We'll start with September first week. Or anything, any doubts if you have, feel free to put in the comment box. I will try to address it in the next class. Okay. So thank you all for joining. Thank you both of you, Sai and yes, Karthik, tell me. General awareness, how to approach. Okay, so general awareness, you are preparing current affairs only. Okay, so general awareness, usually what we follow now, if you want to focus upon clearing the general awareness cutoff at least that much so that you can easily get through phase 2. Okay, so primarily think whenever you pick any type of magazines, okay, that is not important. What is important is which factors you focus upon. National, international news, very much important. Then your banking and financial news, that is important. Okay, if possible from anywhere, if you get hold of PIB news, focus on that. Then obviously then the miscellaneous things such as days, sports, books, appointments, you can easily prepare from there. But these three things form the majority of aspect of current affairs. So even in our course now, as the time is very much less, you must prioritize these aspects. Okay, PIB is very much important. These two things are very much important, and these obviously collectively they are important because 2 questions might come for days, 1 or 2 questions might come for sports, similar cases in this. But prepare these things comprehensively, okay, and also revise these 3 things comprehensively, as well as past 3 months is important. So suppose NABARD is in October, September, August, July become critical, and especially this August and September. Yes, first priority, that's why I have told you star here. Okay, then these 2 news. So he is asking for ESI section, apart from these videos, what should we study so that short questions can be attempted. Okay, so see, if you are focusing or completing the current portion from this as well as whatever I'm telling you in the ESI circular news, then you're sorted at least from the current affairs perspective. Then remains the static part. Okay, so whatever is mentioned in the syllabus, try to focus on understanding each and every concept associated with this. Okay, so that will suffice. Okay. There are many topics that are important in ESI static. Okay, so first of all, every topic which is mentioned in the syllabus becomes important. Okay, but and depends on the exam, if you focus on NABARD, then mostly agriculture and rural portion becomes important compared to other such as industries and services or banking and others. And within banking, RRB and various type of banking system that focuses on financial inclusion as well as agricultural sector, that becomes important. And if you go to RBI, then everything related to RBI regulation, these things become important. Okay, so it depends totally on the exam. But anyways, the syllabus is very important. Focus upon that. Okay, Karthik. Okay. So thank you both of you for joining. We'll meet in tomorrow's session where we'll start September. Okay. So thank you.